Hey everyone, Couch Investor back to another video for today. So let's talk about PayPal's earnings report. Now, to be honest, a very good report, very solid report, beat expectations across the board. And at the time of making this video, the stock is down around 3% or so. Why is that? Well, because there is no mention of generative AI, chip making for AI, etc., etc. Of course, this is a joke. The stock will do what the stock will do. If you're a shareholder, I think this was another solid quarter. Again, it's a solid compounder, free cash flow positive as always in the billions of dollars, repurchasing share. That way they give back to shareholders in one way or the other if the stock isn't performing accordingly. Now, this has been the story for PayPal for a long time, and it will continue. I've said this time and time again, although this might not be a hyper growth stock anymore, it is a solid compounder, meaning free cash flow positive of $1 billion or more each and every quarter, repurchasing billions of dollars worth of their own shares, which means your shares are increasing in value each and every time. Now, if that's not enough for you, you want to see more growth, well, actually, they did raise guidance for full year from around 18% growth to 20% growth. So, hey, at least there is that. Now, I'll start off with a comment from the CEO. So PayPal had a very good start to 2023 and delivered stronger than expected performance in the first quarter. We're working hard to continually improve our already popular checkout and digital wallet experiences, and it is beginning to pay off. We are confident in our momentum and are raising our full year earnings per share guidance as a result. Now, to show you how popular it actually is and to show you that even at this scale already they are continuing to grow, let me show this slide right here. 2015, 2019, 2022. Now, if you look at active accounts, of course, huge push thanks to the pandemic. But then, of course, after that, huge decline as well because of the post-pandemic effect. But overall, on a 5-year CAGR, 14% growth there. Total payment volume or TPV, 24% growth there on 5-year CAGR. Net revenue, 16%. Non-GAAP earnings per share, 17%. And then, of course, free cash flow, 22%. On a 5-year CAGR. I think that's a tremendous growth, especially at the scale that PayPal already is. Now, if you want to have a look at the effects of what it means to have a PayPal checkout, so it says here, consideration, preferences, loyalty. So in consideration, PayPal brings 20% more repeat buyers. PayPal users make 60% more purchases. Preference, PayPal completes 33% more checkouts. And then when it comes to loyalty, PayPal improves purchase experiences by 28% and PayPal increases likelihood of buying by 25%. Now, in my personal opinion, of course, whenever I see a PayPal checkout on an e-commerce website, directly I'm like, okay, PayPal checkout, pretty secure, I'll use that. If I am on an e-commerce website or any other website and I do not see a PayPal checkout option, I'm already asking a couple of questions. Of course, if there is Apple Pay or Google Pay, Amazon Pay, then fine. I say this is a trusted website. But I always like to see the PayPal one. I'm the one that uses PayPal checkout probably a couple of times a month. So these stats to me are pretty honest. Now, all in all, we've talked about this actually in the past PayPal videos. Of course, a lot of growth, accelerated growth is coming from Braintree and the unbranded solutions. So Braintree here delivers best-in-class enterprise-grade processing for merchants who need sophistication and customization. Then you also have PayPal's Complete Payments or PPCP. So that's an end-to-end full-stack payments platform serving SMBs and partners. Now, of course, there is also integration with Venmo, etc., etc. Then they also announced that they're expanding their key merchant relationship with Microsoft. This is not a new relationship. So if you see headlines, oh, PayPal, Microsoft, a new deal. No, this is something they've been working together for a long time. But of course, now with Microsoft expanding their reach when it comes to the web, all the Microsoft services, not surprised to see this, but always nice to see. Now, before I jump into the key financial metrics, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. Don't worry, we're going to cover PayPal, but the video is coming out probably tomorrow before the market opens. The stock is up a lot right now, but I'll want to wait and hear what Alex Karp has to say during the earnings call. So that will be tomorrow morning in the United States, afternoon, the rest in Europe. So stay tuned for that. And if you want to support me even further, do check out the link down in the description and in a pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So when it comes to total payment volume or TPV, growth here 12% FX neutral basis or 10% spot. Net revenue, we have double digits if you look at, well, FX neutral basis here, but if not, then on spot 9%. When you look at earnings per share, of course, right now we're seeing profitability of the business improving quite fast. So GAAP 61%, non-GAAP 33% there. Now, as for cash flow, it's actually down. Operating cash flow is down 4% year over year, and free cash flow is down 3%. Overall, still over that $1 billion. And to be honest, I think it's only going to go up from here. Now, when it comes to operating highlights, so TPV we've seen before, then 5.8 billion payments transaction, that's up 13%, 53.1 payment transaction per active account on a trailing 12-month basis, that's up 13% as well. Then it reached 433 million total active accounts, that's up just 1%. Again, remember, after the pandemic, they were expecting to grow that number pretty fast when it comes to the transaction per active accounts and then total active accounts as well. But I quickly noticed that, the users that they were recruiting, let's say, that they were acquiring during the pandemic weren't really quality users. Those are ones that only had one transaction a month or one transaction a quarter or something like that, and then don't use the platform anymore, which for PayPal isn't really worth much. So they went after the quality users, and that's why growth was slowing down, but the quality you were getting is much better, and it shows. Then as for balance sheet and liquidity, so cash equivalents here, no problem, $15.3 billion there. In Q1, they generated cash flow from operations of $1.2 billion and free cash flow of $1 billion, as we've seen before. Now they say here cash flow from operation and free cash flow impacted by higher cash taxes compared to Q1 last year. On a trailing 12-month basis, generated cash flow from operation of $5.8 billion and free cash flow of $5.1 billion. And here is what I said at the start of this video, repurchasing of shares. So in Q1, they repurchased approximately 19 million shares of common stock, returning $1.4 billion to stockholders. On a trailing 12-month basis, they repurchased approximately 48 million shares of common stock, returning $4.1 billion to stockholders. So again, expect this to continue for years and years. Now, quickly before we look at the guidance, so operating margin was 22.7%. That's a 201 basis points increase year over year. Net income increased 28% to $1.32 billion. Now, as for guidance for Q2, they expect net revenue to grow at around 6.5 to 7% on a spot basis and 7.5 to 8% on an FX neutral basis. When we look at GAAP earnings per diluted share, that's expected to be between 81 and 83 cents compared to negative 29 cents in the prior year period. On a non-GAAP basis, it's expected to grow 24 to 26%. Now, as for the full year guidance, they expect GAAP earnings to be approximately $3.42 compared to the $2.09 for the fiscal year 2022. On a non-GAAP basis, they expect it to grow 20% to just under $5 compared to the $4.13 in the fiscal year of 2022. And again, this is approximately 20%. Previously, they said approximately 18%. So basically a raise here. So to conclude, all in all, solid quarter, good guidance in my opinion, a nice little raise here for the full year 2023. Of course, a lot can change, right? A lot can change with the economy. Right now, we're still in limbo. We don't know what's going to happen. Are they going to raise rates even more? Are we going to go into the recession? What's going to happen with the debt ceiling? What's going to happen in Europe, etc., etc.? Still a lot of question marks if we're being honest, right? But right now, what I'm seeing, and yes, of course, this is not a stock analysis. This is just going over the earnings report, looking at the numbers, and then concluding what we're seeing, concluding what the company is guiding. And to me, good quarter, good guidance, of course. Macroeconomically speaking, still a lot of question marks, but we don't have a crystal ball, so remains to be seen what happens. Those are just my thoughts right now. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.